Hi everybody, this is Gary Dean and this is our nightly video report for Wednesday, May 18th, 2016. I'm getting this out about 6 minutes early just because I don't really think anything's going to play out towards the end of the day. What we had, I still believe that we are heading lower, but the thing is this, is that yesterday I had mentioned that this is where the Bears really want to defend, anywhere from that, it was the 2052 up to the 2062. And we made it kind of right up there, and then that's when the Fed minutes came out, and they just started selling it. It's kind of strange how they follow, exact patterns and stuff, and news hits right when it has to. But in any case, so if they decide that they're really going to try to hold things up right now and they're going to rally, we're looking right between, it's really that same area, say the 2051 up to the 2062. That's what the Bears are most likely going to defend and try and keep the bulls down. Now, we do have that. This did make some bullish divergences here, so again, we may get a little bit more of a pop. But the one dangerous part about trading it when it's in a downtrend like this is that when fear does kick in, it's a lot stronger than greed, and you get people just jumping over each other, and there's not a bid to be found. But with that said, if we did get a bounce, it would make sense. And again, you just want to keep an eye on this area here. So 60-minute chart, head and shoulders is still in play. Neckline, you can see that, these algos or whoever just keeps buying right here to hold this thing apart. Once this breaks and it sticks, where it's most likely going to be a waterfall type move that's going to take it all the way down to the 1995 or possibly lower than that. Now, the reason why I'm saying that is because there's a lot of people that are have been buying right in this area. So if it goes down, then they're all going to have to bail, and that's what's going to accelerate the move. You can see the moving average at 2061. Again, another area of resistance, and above that is the 2071. But again, until we get a clean break of this support area in this area, between at that 2040. It's going to keep getting bought. So it's everyone's getting trained to cover shorts and buy here, sell up here, cover, buy. Cover short. And now what happens is one of these times we are going to see it just continue. Obviously, we're up 6 points. Not up. We're at 2046, so we're 6 points away from it. So I don't believe that's heading today. So we don't really have any bullish divergences. Actually, I guess we kind of do. These are played out. No, we really don't. Not on the 60-minute charts, because this is pretty much the same on that. So anyway, what the Bears need to do, get it through to 2040, 2039, have it stick. That's going to get a reaction trade all the way down, probably into the 2012, but most likely we're coming down to the 1995 or 1959. Those would be the target areas. If they hold it, this is where you want the Bears to step in. On the daily chart, nothing has really changed. The bearish divergences, wave count is all pointing towards a move to come someplace into this landing area between the 1960 and the 1874. It's just a matter of how they are going to get there. Are they going to pop it up, and make sure nobody is short this market and everybody's long before they drop it or something like this? Or is it going to, drift down, bounce, and go all the way down? So it's not. I'm still really confident, and I'm sticking with that. We're heading down to the 1960, all the way down to the 1874. Until that changes, that's the pattern that I'm sticking with. And as of right now, today really didn't give us a whole lot of new information. It was just a lot of buying and a lot of selling, and we're ending the day pretty much right where we started. So with that, have a great night, and I'll talk to you guys tomorrow.